You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 11th of June, 2018. Don't forget, we have our book printed and ready for sale. We're already on the third printing, Charting Your Way to Wealth. We would very much appreciate your support of us. We provide everything here at the channel for free. Our daily charts, all of our training. We have produced this book, of course, which cost a great deal of time and energy to write and then to produce. It is spiral bound, which makes it easy to read. It doesn't fold up on you. You can keep it right by your computer. As you listen to us every day, you can follow the directions in there, all the explanations, the two major methods of trading that we use and talk about all the time. So please follow the link at the right-hand corner of your video screen right now. That will take you to a video all about the book, tell you about what's in all the chapters, how it's set up, and also a link where you can order it. Now, if you are just listening on audio or didn't see that pop up on the screen, you can always go to chartingwealth.com. Under every daily review, every weekly comprehensive review and forecast, you will see a link there. If you're receiving our emails every day, if you're not, you need to sign up for free at the website chartingwealth.com. But if you're receiving them, there's a link there in the email that you receive. Also, if you're watching us on YouTube, if you look in the show notes, you will see a link. Thanks so much. Let's jump right in to these charts. We see stocks are up for the day, bonds down, gold up. Now, as we look at the beautiful chart for the week on the S&P 500, we see a great up candle following, of course, our weekly vertical crossover going up. The power of these weekly vertical crossovers is seen time and time again. A weekly vertical crossover, and it's explained in the book, and we have lots of training videos at the website about it, is when the price percent oscillator, which is a blue line on the bottom of our charts, crosses over either way, up or down. In the case of the crossover on the 1st of June, it was an up move, crossed over the red signal line. That triggers what we call a weekly vertical crossover. It's enough energy moving the index, the commodity, the stock, whatever it is that you're charting. It's enough energy to typically keep it moving. Now remember, we are trend followers, so we're looking for trends, for momentum, for things that we can jump on. It's like when I surf, and I analogize a lot of what I do to surfing. And when you're out there and the wave is forming, then you want to get on top of that wave. You don't want to get on it too early because you just won't get on it. You'll miss it. You want to get on it at just the right time, not too late, but at just the right time. And we believe, and we've tested it over and over and over again, that, again, most of the time, nothing in the market is a sure thing. Just like surfing, you can see a wave that's setting up and you think, this is going to be a great wave. And then you get ready to jump on it and you enter it properly, but it just dies. That happens in the market sometimes too, and it has nothing to do with you. It can be other waves that have gone before, other surges that are coming in, reefs underneath you that you've drifted over. There's no telling what it could be, but most of the time, if you surf and surf and surf, you can tell when a wave's setting up, and it's the same with getting in the market, and you can jump on it at the right time. That is what a weekly vertical crossover is. That's the magic of it. The beauty of it is that most of the time it shows you have a trend that you can ride. Now, what we of course look for after that weekly vertical crossover is a jumping in point. Typically, it's after the market opens. You don't jump in when the market opens on a Monday. There's a lot of things going on. We call it idiot hour because the dummies have already put in their market orders, and the market maker is typically going to trade them in and out of positions based on what's most favorable to him or her. They have a lot of power when the market first opens. So we wait until that hour's over at around 10:30 and we look at the charts. You can also use your 4-hour chart and just check it out at noon. And if it's going, the market's still going in the direction that you're looking at, that's when you look at jumping into your virtual trade. Now, we say virtual trade because we're not a stock calling service. We're not telling you what to do with real money. We're asking you to practice months, years, however long it takes till you become a market master and you develop your own charting abilities, your own special way of doing things, your own favorite charts, whether it's the ones we follow or others, and then, and only then, when you get good and you can, time after time after time, trade and make it work. Not every time, but a large majority of the times, then and only then can you figure out what you want to do with your own money. But if you're listening to us and you are going out and trading real money based upon what you hear from our show, you're not doing what we're telling you to do. We don't take any responsibility for that, and you're probably going to lose a lot of money. I can tell you that. Why? Because it takes a lot of knowledge and a lot of practice to get to the point that you can actually trade and do it well. Anybody on the internet or anywhere else who is telling you that they can teach you one simple little quick course and you can become a millionaire in the marketplace is lying to you. Lying to you and trying to sell you a bunch of bunk and stuff you don't need. Again, there's no free lunch. You want to get to Carnegie Hall, practice, and that's the same here. So, what do we see? We have a weekly candle going up. We see the derivative oscillator building, the price percent oscillator heading up on the weekly chart. We look at the 2-day chart continuing to rise, derivative oscillator gaining momentum, price percent oscillator heading up. We have 3 strong candles pretty much connected, moving up, price movement well above on that 2-day chart, the 2-day trend line. And we look at that 4-hour chart and we see that it is moving up quite nicely. We had that crossover going up on that 4-hour chart, actually right about the time that we had that weekly vertical crossover on Friday. We saw that things bumped up in the morning on Monday and then continued to move up. They leveled out a little bit in the afternoon on Thursday and in the morning, but then on Friday, then popped up again on Friday afternoon. But do be cognizant of where things are. Even though the S&P 500 was up 0.31%, it's really hitting about the same top around 277.70. Now that concerns us because we have 2 down candles in the interim between a topping off point on the morning of the 7th and on the afternoon of the 8th. So be careful and cognizant. We do see the derivative oscillator still heading up, but the price percent oscillator has already peaked. So just keep your eye on the prize. Don't lose out when things start Monday morning. Watch the S&P 500 if you are into that practice trade. Now let's keep moving through these charts. The Q's up just barely, 0.01% for the day. Again, we had a weekly vertical crossover 2 weeks ago, back on the 25th of May. And again, up movement the following week, ending the 1st of June, and then, of course, the 8th of June. And we had a nice big fat candle during this past week. Price movement well above the weekly trend line. Derivative oscillator heading up. Price percent oscillator heading up. We look at the 2-day chart. And we have seen so far the first day of this latest 2-day chart is a red spinning top. It means indecision tending down, and it's broken through and closed below our 2-day trend line. That is a warning sign. Now we had the same thing happen back on the 30th. 2-day candle ending on the 30th of May. And again, it was a warning, it was indecision, but then it went back up. And the market started heading up again for 6 more days. So again, just pay attention. Derivative oscillator still gaining momentum, which is good. Derivative and the price percent oscillator still heading up. So just keep an eye on things and watch it if you're into a Qs trade. I guess that's the Nasdaq 100. And what do we see happening? We saw in the morning, we had a crossover going down on the 4-hour chart. Derivative oscillator had been precipitously losing energy over the last day and a half. And then we saw in the morning on Friday, a drop off into the red on the derivative oscillator, heated up even further in the afternoon, ended the day with a green spinning top. Means indecision on our smallest chart, tending up. Price movement is still above the 2-day trend line on the 4-hour chart. So again, watch things. It did crossover going down, and the crossover occurred at the same time on both the price percent oscillator and the derivative oscillator, which typically means that's going to continue. So just watch it. If you've not already pulled the plug in your Qs trade and you want to stay in because the bigger charts are telling you that it's okay, just watch that 4-hour chart and don't lose what you have gained. Okay, now let's look at 20-year bonds. Where are they? We had a weekly vertical crossover back on the 25th. Some warnings, however. We didn't see the derivative oscillator flip over at the same time the price percent oscillator did. That can many times be a warning sign. The following week, things did flip over on the derivative oscillator. Nice big up week on the week ending the 1st of June. But this last week has really been a disappointment. We ended it with pretty much a doji. It looks like a cross, a red one, which means indecision tending down. However, the price percent oscillator is still gaining energy, well, still moving up, and the derivative oscillator is still gaining energy. So interesting to watch. Now, as we look, again, the weekly is still in a confirmed uptrend, not a super strong one. What's the 2-day chart doing? Well, it's flat. Derivative oscillators losing momentum. Price percent oscillator, first day of the latest 2-day candle is a green. I'm trying to see if it's a green spinning top. Just what it is, it's hard to tell. It's just a small green candle. Derivative oscillators losing momentum. Price percent oscillator is not heading up at the same strong angle. It was pretty much sideways. So again, watch that very closely. And as we look at the 4-hour chart, what are we seeing there? Well, the 4-hour chart actually crossed over going up. I'm sorry, I went to the 4-day chart. I was like, what is going on? That doesn't make sense. Okay, 4-hour chart, we've been waiting to see if it's going to cross over going up. Derivative oscillators losing downward momentum, but the price percent oscillator still headed down. We're just going to have to watch and see. If there is a crossover going up, then you may have a jumping in point on TLT. But again, it's real quirky, particularly with the way the week ended with all of that indecision. Unless that 4-hour chart rotates over going up, you're not going to have anything on TLT. So keep your eye on it. It may rotate over going up at the beginning of the week. You may have a play there. Lastly, we go to gold. Now, what do we see in gold? Still in a confirmed down move on the weekly chart. Price movements below the weekly trend line. Derivative oscillator pretty much flat. Might be losing a little bit of energy. Price percent oscillator still headed down. That 2-day chart is trying to cross over going up, very close to that. First day of this latest 2-day candle is a little green open box candle. Derivative oscillators gaining, actually flipped over and heading up. Price percent oscillator looks like it's trying to cross, and if that occurs, of course, that would violate our rule. That would mean that we have to move the 2-day over and have a 2-day crossover going up, so there wouldn't be a possibility of any kind of downplay in gold. What's going on that 4-hour chart? Of course, it's still heading up. So again, not really strongly. In fact, over the last 2.5 days, it hasn't gotten as high as it got back on Wednesday, the 6th of June. So again, keep your eye on gold. We're just going to have to watch it and see if anything happens with it. If there is, at the beginning of a week, a strong rotation over and down move on that 4-hour chart, you might look at shorting gold at that point. But if that doesn't happen, keep your powder dry. Folks, that's where we are. Again, we sure encourage you to order our book. We would love to have your support, shipping out all the orders as they come in as best we can, and we so appreciate all that. I include a personal note from me, and I autograph all the books for you. So again, the links to purchase those books are there in every format we put things out on. You can find it at the YouTube channel, in all the daily review emails, and the daily reviews at chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.